Hi there, Evan here with Crypto and Markets for Tuesday, September 11th, 2018. Today is the 17th anniversary of the tragic events that happened at the World Trade Center in New York in 2001. We lost many in the financial community, along with many others. Never forget. Now let's get right into it. I keep watching the news every day, see what's being reported on China, and continue to be amazed how little people understand the real story here. No, it isn't about trade war. Trade war is geopolitics with North Korea. That's all it is. Okay? It was always the credit cycle. It always was the credit cycle. Always will be the credit cycle. Case in point, remember I reported a couple of months ago that the regime wanted the banks to stop using junk debt as collateral for corporate debt and wanted them to pare back how much corporate debt they held in their balance sheets. Well, when the banks went ahead to try and sell some of that debt, no one wanted it. What does that tell you? The whole thing was a fraud. It always was a fraud. Okay? And now everyone's shocked. The Chinese about a month ago went ahead, overturned that, told the banks get as money out to on the corporate side as possible, and still the banks are reluctant. Why? It's not because they're paring back risk. It's because they got too much junk in the balance sheets. There's nothing else they can do anyways. That's all that is. And the residential side, well, I've gone over that too many times on here, but let me go over it again. The housing market there had a 30% run up in 2016. People were taking out no income verification loans, buying property, which then led to the capital controls, which then led to the regime saying real estate is all a prohibitive investment. Did they do that because they were preventing fraud? No, it's because they had to. The credit cycle had started slowing down even before that. People had stopped paying their loans, etc. They weren't going to fool the market. We all knew what was going on there. Now, again, recently, in some of their lower tier cities, there has been a bit of a ramp up again. How long that lasts, again, I don't know. But to the broader point, the real story here was a decline in the the credit cycle. That's the real story here. And then peel the onion back. Where else is it starting to hurt now? Or has since really the late part of last year? Global manufacturing. Again, did many videos on this. Look at Europe. Look at Korea. Look at Japan. Look at even now the US manufacturing side. Starting to slow because of this. Sorry. And again, peel the onion back. Global trade. How much global trade was going to what was going on, the growth cycle in China. Again, we're finding out it's the only player that really mattered. Now, of course, secondarily, you can state as well the Chinese slowdown has helped bring down the euro. The euro's helped drive up the US dollar, which has then hurt other emerging markets. But again, all started by China. And I'm so amazed again and again how little people on Twitter, in the mainstream media, really understand what's going on here. To their credit, Zero Hedge has actually been all over this as well. and a few on Twitter. I'm not going to say all of them haven't. But again, everything you're really seeing in the global economy right now is because of China. And no, it has nothing to do with the trade war. It was the credit cycle. It always was the credit cycle. Notice that turned late 2016, and the ball's been rolling ever since. And that's long before a trade war was even announced. Okay? You can even fact check me, look it up for yourself, research it for yourself. People have no idea how much energy in the global economy went to this Chinese credit cycle and how much is being hurt as it turned down. But again, don't believe me? Go look it up for yourself. Then commodities started to take a hit. Energy started to take a hit. Why? Because of the U.S. dollar's gone up. Because of all this economic turmoil going on around the world, which has then hurt commodity demand. Done 2 previous videos on this. The strong US dollar has hurt commodity demand in China and the emerging markets because they needed a cheap US dollar to buy all the goods they were. But again, that's a separate issue and a microcosm of what happened with China, and there is some leverage to it. But again, the real story in China is the credit cycle. That's it. And even then, to those of you who tell you it's by design, I'm going to leave it with one thing. If things were going good, if things were still growing the way they were in 2016, would the regime try and slow it down or keep it going? I think we know the answer. Hit the like button, leave a comment down below, subscribe for more, and most importantly, follow me on Twitter at CryptoMarkets2. You'll have a good day.